Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Etsy.
If you find our talks useful, please consider subscribe, like, and comment underneath. I was pulling up the charts for this one, and I have to be honest, looking at Etsy feels like looking at a time capsule.
A time capsule of the last 5 years, for sure.
It's been such a roller coaster.
Yeah.
It feels like just yesterday, during the lockdowns, literally everyone was opening an Etsy shop. It was, the golden era of hand-sewn masks and sourdough kits.
Oh, yeah. It was the absolute darling of the pandemic economy. If you weren't on Amazon, you were on Etsy.
Exactly. The stock was a rocket ship. But looking at it lately, it seems like the market has just completely fallen out of love with it.
Yeah, the sentiment has definitely soured.
It's confusing. The stock came down to earth, dug a hole, and, well, seems to be living there now. Is this business actually dying, or is it just taking a very, very long breather?
It's the classic post-pandemic hangover story. That's what the headlines say anyway.
Right.
But if you look closer, that whole hangover narrative is, I think, masking a much more interesting and potentially profitable story.
Okay, well, I'm listening.
The investment thesis we're exploring today isn't about selling more knitted scarves. I'm calling it the algorithm awakening.
The algorithm awakening. Okay, that sounds a bit like a sci-fi movie title. What does that actually mean for, a digital flea market?
It sounds futuristic because the business model is fundamentally changing, and I don't think the market has priced this in yet. For a long time, Etsy was just a volume game.
Get as many sales as possible.
Exactly. Get people to type gift for mom and buy the first thing they see. But the pivot that's happening right now, looking toward 2026, it's structural. They're moving away from just transactions to becoming a high-margin, algorithm-driven personalization engine.
So it's a shift from volume to value.
Precisely. It's a shift to quality over quantity.
But why now?
Yeah.
Why is 2026 the magic year? I mean, companies don't usually change their entire engine unless the car is stalling.
And the car was stalling. That's the truth. The old growth engine broke. If you look back to the peak in 2021, gross merchandise sales GMS hit $12.2 billion. That was the absolute mountaintop.
Right. Peak saturation. Everyone had their custom mask.
Yep. And from there through 2024, the GMS contracted. So the company had a choice: accept a slow decline or change the machine. They chose to change the machine. The why now is that the tech they've been building for years is finally hitting maturity.
Okay, that makes sense. You can't ride that pandemic wave forever. So if the thesis is this algorithm awakening, we need to see some proof. Where's this showing up in the numbers?
This brings us to, I think, the single most bullish signal in the whole analysis, and it's one a lot of people miss. It's the mobile transformation. By Q3 2025, 46% of all marketplace GMS came through the Etsy app.
46% on the app.
A highest level ever recorded.
Okay, let's unpack this. Why does it matter where I buy the vintage t-shirt? A sale is a sale, isn't it? Etsy gets their cut either way.
Economically? No, absolutely not. A sale on the app is worth significantly more over the long term. It's all about the behavior.
The behavior.
Think about it. When you go to Etsy on your laptop, what are you usually doing?
I'm looking for something specific. I need a wallet. I search letter wallet, buy one, I'm out.
Exactly. It's transactional. Get in, get out. The app, though, the app is designed for what we call doom scrolling for cracks.
I like that.
It's browsing, it's discovery, and because of that, app users have much higher repeat purchase rates. They're just scrolling through a personalized feed of things the algorithm thinks they might like.
So it becomes habitual, like checking social media. You
Yeah.
open it just to see what's new.
Exactly. And that completely changes the unit economics.
Mhm.
Customer acquisition costs, or CAC, they go way down because you don't have to keep paying Google to bring that person back.
The push notification is free. That's a huge margin improver.
And it goes deeper. This creates a winner-take-most dynamic. On a phone screen, real estate is limited, the algorithm has total control, so high-quality sellers, they rise to the top.
And to get seen by that algorithm.
They are incentivized to pay. They pay for premium tools, for promoted listings, and that expands Etsy's margins. They make money on the transaction, sure, but they make high-margin money on the visibility.
That's fascinating. Okay, but let's talk financial health. I saw a headline about a big share buyback, $750 million.
It's a huge piece of the puzzle. When a company authorizes a buyback that big, especially when the stock's been struggling, it's a very specific signal. It's what we call a value trap recovery signal.
Value trap recovery. Break that down for us.
A value trap is a stock that looks cheap, but the business is shrinking, so the stock just keeps falling. This signal, the buyback, is management looking at their own stock price and basically saying, the market is wrong, we're undervalued.
So it's a massive vote of confidence. They're saying, we have the cash to run the business and buy our own stock because it's on sale.
That's it. It shows they have strong free cash flow, and it puts a floor under the stock.
Okay, but here's where I have to play devil's advocate.
Go for it.
While the company is buying, the execs are selling. I saw the CEO, Josh Silverman, and the CAO, Marilee Buckley, sold nearly $9 million worth of stock combined. If they're so confident, why are they cashing out?
It's the classic bear argument, and it's a fair question. You see the CEO selling and you panic, but you have to put it in context.
What's the context?
These executives get paid largely in stock. Selling shares is often just standard financial planning. It's diversification.
So they're paying for a kitchen remodel, not fleeing a sinking ship.
Most likely. Imagine 95% of your net worth was tied up in one stock. Your financial advisor would be screaming at you to sell some.
So we should weigh the actions differently.
100%. Individual insiders selling a few million, that's personal finance. The board authorizing a $750 million buyback. That's corporate strategy. The corporate checkbook speaks much, much louder here.
That's a really helpful way to frame it. Okay, let's talk moat. What stops Amazon Handmade or, Temu from just eating their lunch?
It comes down to what I call identity as a moat. Amazon Handmade.
Okay.
It feels like a warehouse, right?
It feels like Amazon. It's sterile.
Exactly, corporate. And eBay is just a chaotic garage sale. Etsy owns the authentic maker narrative. There's an emotional connection.
Right, you feel like you're supporting a person, not a supply chain.
And that allows for premium pricing. But the tech moat is just as important. That 2026 algorithm, it prioritizes behavioral signals, clicks, saves, even dwell time.
Dwell time.
How long you pause on an image while you're scrolling, even if you don't click, the algorithm knows you hesitated.
Wow. So it knows what I like even better than I do.
Pretty much. And that creates a powerful network effect. More app usage trains the algorithm, which makes better recommendations, which drives more sales, which locks in the best sellers. It's a self-reinforcing loop.
Which is why they aren't really competing with Shopify.
Not at all. Shopify is infrastructure. Etsy is a destination. Huge difference.
Let's get into the nitty-gritty then, the technicals. For the traders listening, what's the chart telling us?
The price action is in a phase of capitulation followed by stabilization.
Capitulation. So everyone who wanted to sell has finally given up and sold out.
Pretty much. The weak hands are gone, and now it's finding a floor. Current support is holding very firmly at $58.40. That's the line in the sand. On the upside, we're looking at resistance around $65.65.
So we're bouncing in a channel between roughly $58 and $65.
Yes, but with a positive bias. It's holding above the 50-day moving average, which suggests the medium-term trend is trying to turn upward. And if you look at who's buying...
Yeah, big funds like Robeco are selling. That looks bad on the surface.
It does. But look who's buying. Smaller, more nimble funds like LeCap Asset Management. This is a classic smart money accumulation pattern. The big, slow funds are rotating out, and the sharper, opportunistic funds are stepping in to buy the dip.
So the agile money is betting on the turnaround. What's the general sentiment score?
AlphaVantage has it at a plus 0.414, which is technically bullish. It's not euphoria, but it's positive.
And the analysts seem really split on this one.
They are. You've got Cantor Fitzgerald lifting their price target, seeing the turnaround. Then you have Wells Fargo with a sell rating.
Why are they so negative?
My guess is they're looking backwards at that GMS contraction. They're driving by, looking in the rearview mirror. The bullish analysts are looking ahead at the margin expansion from the app. I think the bears are behind the curve here.
Okay, a split jury often means there's an opportunity. Looking forward, what are the catalysts for the next, say, 3 months?
The big one is Q4 earnings, due in late February.
And what do we need to watch? Not just revenue.
No, revenue is vanity here. Look at the GMS growth rate. Has it stopped bleeding? Is it flat or ideally slightly up? And crucially, watch that app penetration number if it breaks 50%.
That would be the tipping point.
Yeah,
Proof.
that would be massive validation of the whole thesis.
And what about the macro picture?
Interest rates. Potential rate cuts in 2026 are a major tailwind for Etsy.
Because Etsy sells.
Nice to haves. Discretionary items. When rates come down and consumer wallets loosen up, that money flows directly into Etsy's niche.
Makes sense. Any wildcard catalyst we should keep an eye on?
There's some speculation about new AI-powered seller tools. Think automated photo enhancement or description writing.
Ooh, that would be huge for sellers.
Mhm.
Taking good photos is so hard.
It is. And Etsy could charge for that as a service, another high-margin revenue stream. There's also some chatter about international expansion into India or Latin America.
Wow, cracking the India market would be a game changer.
A total game changer, massive potential.
All right, we've covered a lot. Before the verdict, let's talk risks. What's the nightmare scenario?
The bear case is simple. The algorithm awakening fails. GMS continues to flatline despite the app shift. If that happens, the stock becomes a true value trap and the business is just fundamentally shrinking.
The risk is they build the perfect engine, but nobody comes back to put gas in it.
That's the fear. Exactly.
Okay, weighing all of that.
Yeah.
What's the smart wealth score?
Taking everything into account, I'm giving this a 7.2 out of 10.
7.2.
Yeah.
So a solid score, not a bet the farm score, but a pay close attention score.
Hmm.
How do we trade this?
This is a swing trade. Think 6 to 12 months. You need time for this thesis to play out.
And what are the targets?
Short term, looking for a move to that resistance at $65 to $68. If the margins expand like we think they will, the medium-term target is $75 to $85.
Decent upside. And the stop loss, where do we get out?
Stop loss at $55. That's just below that critical support. If it breaks $55, the thesis is likely wrong and you get out.
So to summarize, this is really a patience play.
It is. It's a patient value trade. The market is pricing Etsy like it's a dying retailer from 2021. It hasn't priced in the margin expansion that comes from being an algorithm-first mobile platform. That gap is the opportunity.
The gap between the perception of a dying craft fair and the reality of a high-margin data company.
That is the perfect way to put it.
Well, there you have it, the algorithm awakening. It's definitely given me a new way to look at the stock. As always, thank you for breaking it down.
My pleasure.
And to our listeners, take a look at your own portfolio. Do you have stocks that are pivoting right under your nose? Are you judging them on their past or on their future? Something to think about. That's all for us today on Smart Wealth with Joshua. We'll see you next time.